one of Singapore's most dependable dividend-paying REITs, Keppel DC REIT, just got promoted to the Straits Times Index, replacing Jardine C&C. This isn't just a shuffle, it's a major signal to income investors that Keppel DC REIT is the real deal. But does that mean it's time to load up, or is the stock already too hot to handle? We'll break it all down. From property portfolio, sponsor strength, dividend history, to whether the REIT is currently undervalued or overpriced. So stay with me till the end. You don't want to miss the verdict that could help you build solid passive income from data centers. And hey, if you want to grow your income and be cash flow rich, not just asset rich, make sure to like this video, subscribe to Wealth for You, and hit that bell so you never miss a smart income idea. Disclaimer: this video is for educational purposes only and does not constitute financial advice. Always do your own research or speak to a licensed advisor before making any investment decisions. Chapter 1. Meet Keppel DC REIT. Now, if you're new to Keppel DC REIT, let me introduce you to a real gem in Singapore's REIT space. Unlike most REITs that invest in malls or office towers, Keppel DC REIT is Singapore's first and only pure-play data center REIT. That means their properties power the digital infrastructure behind almost everything we use daily, from cloud storage and video streaming to AI workloads and enterprise networks. We're talking servers, racks, high-speed cables, cooling systems, and everything needed to keep the digital world running 24/7. As of late 2024, they've grown to 25 operational data centers across 10 countries, including Singapore, Australia, Germany, Ireland, and Japan. That gives them strong geographical diversification and exposure to global tech demand, something few REITs can claim. Their sponsor? It's none other than Keppel Corporation, a heavyweight in infrastructure and real estate. That backing means Keppel DC REIT benefits from deep expertise and a strong pipeline of potential acquisitions. In terms of scale, their assets under management reached around 5.2 billion Singapore dollars after their acquisition of Singapore data centers 7 and 8. That's a massive step up from just a few years ago. Their market cap as of early June 2025 is roughly 5.08 billion Singapore dollars, putting them comfortably among the larger Singapore-listed REITs. Most importantly, their portfolio occupancy stands at 96.5%, which means nearly all their space is generating rental income, mainly from hyperscalers, cloud providers, and enterprise IT clients who aren't going anywhere anytime soon. This is not just another REIT, it's a vital engine of the digital economy, offering both income stability and future growth. If you're a Singapore investor looking for solid dividend income with long-term relevance, Keppel DC REIT might just deserve a spot in your portfolio. Chapter 2. Q1 FY2025 Financial Highlights. Things are looking hot. Let's talk numbers, because the latest quarter for Keppel DC REIT wasn't just good, it was fire. In the first quarter of financial year 2025, Keppel DC REIT showed that it's not just riding the data center wave, it's leading the charge. Here's what the scoreboard looks like. Gross revenue hit 102.2 million Singapore dollars, up 22.6% from the same time last year. Net property income rose to 88.1 million Singapore dollars, a strong 24.1% increase. Distributable income, the part that's available to pay unit holders like you and me, jumped a whopping 59.4% to 61.8 million Singapore dollars. And the best part? DPU, or distribution per unit, climbed to 2.503 cents, up 14.2% year-on-year. That's more income, more cash flow, and more reason to smile if you're holding on to this REIT. So, what's powering this surge? First, they've been on a shopping spree, acquiring new income-producing assets like Keppel DC Singapore 7 and 8 and Tokyo Data Center 1. These aren't just any properties. They're plugged directly into Asia's and Japan's growing demand for cloud and AI infrastructure. Second, Keppel DC REIT renewed several rental contracts at higher rates, which means more rental income coming in. That's the beauty of mission-critical infrastructure. Once you're in, clients don't just pack up and leave. And finally, this one's a big win. Finance costs came down. With interest rates starting to ease and smart loan repayments, they're paying less interest to the banks and passing the savings straight back to investors. Translation? They're earning more, spending less, and distributing more to you, the unit holder. That's what we call cash flow magic, and exactly why income-focused investors are paying attention. Chapter 3. Is Keppel DC REIT undervalued or overpriced? Now let's answer the million-dollar question. Is Keppel DC REIT a good deal right now? The short answer? Most analysts believe it's fairly priced to slightly undervalued. And honestly, that makes a lot of sense when you consider everything. First off, Keppel DC REIT isn't your typical shopping mall or office space REIT. It sits in a high-growth sector, data centers, which power everything from AI to Netflix and from cloud storage to TikTok. This kind of digital infrastructure is becoming essential in our everyday lives, and that demand isn't slowing down anytime soon. Because of that, investors are willing to pay a premium, and rightly so, for a REIT that's part of this future-facing industry. Let's look at some facts. Analysts from DBS, OCBC, and UOB Kay Hian have a buy or accumulate rating, with target prices above $2.25, where it's trading today. Now, let's talk about valuation, because while Keppel DC REIT isn't exactly cheap, it's not overpriced either. Its PE ratio is around 13.2, which is actually lower than many of its peers in the data center space. For context, data center REITs often trade closer to 15 times, while traditional REITs sit much lower, around 8.5 times. So yes, Keppel DC isn't at rock-bottom pricing, but it's also not stretched by sector standards. Morningstar even puts its normalized PE at around 22.2 times, reflecting the premium that high-growth investors are willing to pay for digital infrastructure plays like this. Now, if you look at price to book, Keppel DC REIT trades at about 1.46 to 1.5 times its book value. That might sound a little high, but again, this isn't a bargain bin retail REIT. You're paying for quality, consistency, and exposure to the fast-growing digital economy. So, in short, you're paying a little more, but you're also getting a lot more in terms of long-term relevance, tenant quality, and future-proof income. For many income-focused investors, that's a pretty fair deal. And don't forget, the dividend yield is still sitting around 3.8% to 4.2%, which is very decent considering the stability and potential for long-term growth. Plus, Keppel DC REIT has a strong track record of growing DPU, not cutting it. So what's the verdict? Keppel DC REIT isn't dirt cheap, and it's not meant to be. It's a high-quality premium asset with reliable income and future growth baked in. For income-focused investors, especially those of us in Singapore who want to be cash flow rich, not just asset rich, this could be a solid addition to your portfolio. And hey, if the share price dips below $2 again, that might just be your cue to load up. Final thoughts. Be cash flow rich, not just asset rich. Here in Singapore, we're taught to chase assets, the condo, the car, the CPF. But let's be honest, what truly gives us freedom is cash flow. And that's where a REIT like Keppel DC comes in. It pays you steady, half-yearly dividend. It taps into the unstoppable growth of the digital economy. And now it's earned its place as a blue-chip stock in the STI. Whether you're planning for early retirement, looking to supplement your salary, or just want to sleep better knowing your money is working for you, Keppel DC REIT deserves a spot on your radar. If this video helped you, go ahead and smash that like button. It tells YouTube to show this to more people who care about passive income just like you. And don't forget to subscribe to Wealth for You, where we help you build real wealth, not just on paper but in your wallet, your lifestyle, and your peace of mind. Because you don't need to be rich to start. But you do need to start to be cash flow rich. See you in the next one.